The US is one of the least tax-friendly countries in the developed world, and while that might sound like a good thing, especially if you're rich, it actually keeps our economy from growing and makes everyone poorer. But what if we did things differently? What if we made the US the most tax-friendly country in the developed world? In today's video, I want to show you how we can do this and why we should. Let's start with how much tax you pay currently in the US compared to other countries. According to the OECD, which includes all of the major developed countries, the US has the third highest effective tax rate, meaning on average Americans pay around 30% of their income in taxes at both the federal and state level. Only Austria and Belgium are higher. In fact, in some states like California, New York, and Hawaii, the tax burden is even higher than in those European countries. This figure shows how your average tax burden compares to the size of your income. So, for example, someone making $35,000 will pay about 7% of their income in taxes, while someone making $5 million will pay about 42%. That's a big difference. But wait a second, isn't this just regressive? Does this mean that poor people pay more taxes than rich people? Not really. You see, these are averages. So while the average tax rate is the same, rich people end up paying more total dollars in taxes than poor people because they make more money. The question, though, is, should they be paying more? Should the US have the third highest tax burden in the developed world, or maybe the highest? Well, actually no. It turns out that high taxes don't actually do what you think they do. They don't raise government revenue. Here's a chart of tax revenue as a share of GDP, basically how much of the country's total economic output is captured by the government through taxation. As you can see, there is an optimal amount of taxation after which it becomes counterproductive. It actually lowers GDP and thus the overall tax revenue. And what's interesting is that the US is already beyond that point. Currently, the US collects 32.9% of its economic output in taxes, only beaten out by Denmark and Japan. For comparison, most of Europe is well below that number. France, for example, collects only 25.6%, Germany 26.6%, and so on. But this doesn't mean that Europeans pay less tax. They don't. It means that their governments simply spend less of the country's economic output. Now, if you're thinking, well, shouldn't we spend more on welfare, healthcare, and education? Well, here's the thing. Extra spending on public services tends to be pretty unproductive. The reason productive people pay taxes is so that the government can do productive things, build infrastructure, enforce contracts, maintain a military, etc. If instead the government spends that money on unproductive things like bureaucracy or benefits, then you'll get a lot less output for the input of taxes. And the more unproductive the spending, the less people are willing to work hard and contribute to society, because what's the point? You earn $1, you hand over 30 cents to the government, and they use it to give 10 handouts to people who didn't contribute anything. No wonder people don't want to work hard and pay taxes when they see it as essentially a wealth transfer rather than a system to fund public services. It gets worse. We can't even agree on what the government should be spending on. Most government spending isn't even on public services. It's on military spending and corporate welfare. If we look at the US, for example, only 32% of spending goes towards public services like education, healthcare, and infrastructure. Half of it goes to the military and the rest to corporate welfare in the form of subsidies, tax breaks, and grants. Now, I'm not against government spending on any of those things. But the point is that we can't agree on what we want the government to do. The result is that people feel like their taxes aren't being used for anything that they actually care about. And as a result, they move their money offshore, hire tax lawyers, and do everything they can to avoid paying taxes. So what does this tell us? It tells us that taxes are best when they are simple and fair, when people understand them and agree with them. The problem with the current US system is that it's neither simple nor fair. There are so many deductions, credits, and exemptions that the vast majority of people need to hire expensive accountants to help them navigate the tax code. I know someone who spends tens of thousands of dollars every year on taxes. Is that what you were expecting when you paid 30% of your income to the government? Or how about this? In 2021, a full 27% of the standard deduction was claimed by taxpayers aged 65 and older. That's not fair. It's corporate welfare. And now, I know what you're thinking. What's wrong with a little bit of corporate welfare? Isn't it helping people? Well, yes, but it's very expensive. And here's the thing. If you're making a few $1,000s a year, you'll probably receive less than $1,000 in corporate welfare. But if you're making a few $1 billion a year, you'll probably receive a few $100 million in corporate welfare. And that is not even accounting for the rent-seeking behavior where companies spend millions lobbying politicians to get even more corporate welfare. Remember, this is money that comes directly from the taxpayer. It's not like politicians are getting billions of dollars out of thin air. But here's the worst part. It all adds up. Corporate welfare in the US adds up to about $1.9 trillion every single year. Just let me repeat that. Every single year, the US government gives away $1.9 trillion in corporate welfare. And it's not just the US. The UK does something similar. It hands out £80 billion in corporate tax breaks every year. France, €85 billion. Germany, €76 billion. These numbers are absolutely mind-blowing. This money could be funding fantastic public services, but instead it's going to corporations who use it to buy back their own stock, because that's how the executives get paid, or give it to shareholders who use it to gamble in the stock market. If you're wondering what the solution is, it's simple. Make the US the most tax-friendly country in the world by far. Lower taxes across the board. Simplify the tax system so that everyone understands it and agrees with it, and get rid of all the corporate welfare. Here's how it would look. A flat tax of 15% on all income, profits, and capital gains. Everyone pays the same. No loopholes. All government spending cuts by 2/3 except for defense, which stays the same. And all corporate welfare is eliminated. We also stop punishing corporations for being successful and start rewarding them for creating value in the form of taxes. Now, you might be worried about what happens to all the government revenue. Well, you don't have to be. First of all, lower taxes boost economic growth. So even though we're collecting less in taxes, we're collecting it on a larger economic pie, which means it could add up to the same amount. Second, we can cut spending by 2/3 because we're eliminating corporate welfare and focusing on actual public services. And third, we get rid of all the tax evasion and avoidance that exists today. People are much more likely to report their true income when the tax rate is lower and everyone pays the same. Some people, however, will still try to cheat the system. But here's the beautiful thing. When we audit them, we'll be able to take back the tax revenue much more easily, because there wouldn't be hundreds of thousands of pages in the tax code for us to go through. In fact, an audit won't even take years anymore. It'll take a few hours. And the fine for tax evasion won't be millions of dollars. It'll be a few thousand. What's interesting is that since the introduction of the flat tax in Slovakia, the tax gap between what the government wants and what people are willing to pay has narrowed significantly. In Estonia, the informal economy shrank from 27% of GDP to less than 20%. And in Bulgaria, the tax gap went from $35 billion to $11 billion. Now, of course, lower taxes alone won't fix all of the US's problems. You still have issues like a broken immigration system, a bloated military, and trade wars. But the silver lining is that lower taxes would make it easier to solve these problems because people would have more money left over to spend on lobbying politicians or starting new businesses. It would be a win-win for everyone.